The fraudulent pricing is certainly would lead people to believe that there is no demand in this industry when you see a price behave the way that it has, but quite to the contrary. What is coming out of the U.S. Mint, the high premiums that you get for silver eagles is more indicative, or of junk silver, is more indicative of what the demand in this market's really like right now. The same thing I've been saying all along. They'll never taper. They'll never raise rates. They'll never normalize their balance sheet, not by their own hand. It'll be the market that deals that blow, not them. Look, you can't stop. I've been saying for as long as I can remember, it's inflate or die. Richard Russell was saying that 20 years ago, that the Fed has no choice but to inflate or default, that they will not choose the difficult decisions. They will not choose the pausing or abolishment of entitlements. They will not stop inflating. They will not stop stimulating. They can't. They've reached that point where if they do, interest rates rise and the whole thing implodes. They can't allow it to happen. And for them to say, well, it's the Omicron variant that now is going to change our tapering plans, it's a bunch of nonsense. I've been saying forever. And the bond market understood that. The bond market has understood this now for a little while because just, a couple weeks ago when he announced that they were going to taper, that you would suspect the bond market to see, to sell off, and instead it rallied, went the other direction. The bond market understands that they can't taper, and if you really think about it, when you see 19 years worth of money going into the stock market in 1 year, they can't taper, they can't normalize, they can't let rates rise. If rates rise, everything blows apart. And, we're very similar to where we were in 1980, where you had inflation roaring, and you had a Fed chairman at that point who came in and raised rates to almost 20% in order to stop it. You can't do that any longer. So that arrow in their quiver, those tools are no longer available to the Fed unless they want the whole thing to blow up. There's your Great Reset. Short of that, they have no choice but to continue more of the same. And it'll be lip service. Yeah, we're going to taper. Oh, but wait, there's a new variant. Sorry, we can't taper. It's changed our plans. Or, look, you take a look at Powell. Since he's come into office, their balance sheet has doubled and inflation has tripled. And by their own measurement. What does that mean for if he stays on now that he's been reaffirmed? Does that mean that we'll see their balance sheet double again and interest rates go up to 12-fold? Or excuse me, inflation go up 12-fold? The point of it is that he may say one thing, but his actions are betraying his rhetoric. And you can look and see just simply watching the balance sheet double and inflation triple under his watch. So not to mention you have a modern monetary theorist alongside him as the vice chair of the Fed. So any way you look at it, in my opinion, it's more of the same. Expect more inflation. Expect asset prices to continue to defy gravity until they collapse. And it's a game of musical chairs. Yeah, it's been a great run until the music stops and you're left without a chair. And that will happen at some point. What is the cause or the catalyst remains to be seen, but I promise you it will not be the Fed purposely raising interest rates. They will not do it. There will be a new excuse every single time that they say they're going to taper. They will not taper. No, there won't be. And, I listened to that interview and I read the Bank of America Flow Show report before I saw that. And I talked about that on our update yesterday, but then I listened to your interview with Michael today. He's one of my favorite. I think he's a wealth of information, and to the point where I've sent a lot of people to him for investments. I think he's as good as they get. But what he said again, people need to understand. Let me just recap the one phrase or the sentence. Equities have seen a record $893 billion in inflows this year, surpassing a combined $785 billion of inflows seen over the last 19 years, said Bank of America. So you're talking as much capital going into the equity market in 1 year as the preceding 19. How long before that has to correct? how long can they keep blowing that much air into the balloon, even if there isn't a pinhole? If you just stop blowing air into the balloon, it starts to deflate. And I think it's when he talks about it being a very dangerous, overvalued market, if that doesn't underscore just how dangerous it really is. Earlier, you had mentioned the phrase, find proper price discovery or something along those lines. Everything right now is skewed, with the exception of gold and silver may be skewed to the downside. But all asset classes are, I would argue, are being challenged to find what real price discovery is. And that's because of the easy money and the manipulated interest rates. If interest rates were set by the market, not by the central planners, not by a handful of bankers, then I think you would see a whole different landscape out there. When Michael Pintos, who is a legendary money manager, says this is the scariest, most dangerous stock market he's ever seen, I don't know. I don't understand why people don't see it as well. I look at it, that one statement, $900 billion in 1 year, that's 19 years worth of, more than 19 years worth of inflows. If that doesn't crystallize that this is walking the knife's edge, I don't know what would. They started rationing gold buffaloes and gold eagles. They made a very limited run of silver eagles for the first 3 months of the year. We talked on your show about the mint shutting down for 3 to 4 months in the first quarter, leading into July's recent release of the Type 2. That was met with a lot of disbelief, even the mint saying, no, we're not closing down. Yet, in essence, that's what they did. They did not issue anything for the better part of almost 4 months. We've seen repetitive temporary disruptions to allocations being limited or rationed. And here we are now with very, very small mintage in the Type 2 Silver Eagle that is now being ceased into January, when they will come out with the 2022 version second week in January. It makes no sense why they have to wait 5 weeks to issue new coins when there's so much demand. And it's this inefficiency that has propped up premiums on the Silver Eagles as high as I've ever seen them. They have not been below $8.50 for the better part of 2 years. And it's, in terms of pricing anomalies in the physical market, you can put Silver Eagles at the very top of the list. And it's because of this inefficiency that the U.S. Mint is just not able to keep up with demand and or for whatever reason seem to be rationing whatever silver it is that they're able to bring to market. And by the way, that's actually against their charter. It's against the law. The law that was put into place when the Mint was founded in 1986 is that they have to issue as many Silver Eagles as is demanded by the public. And they've done a woeful job of that. So at this point, looks like that's it for the end of the year. So I expect to see more of the same increase in premiums on coins. And look, it's not just Silver Eagles. You're seeing it in Canadian Maple Leafs. You're seeing it in junk silver. Premiums on things are beginning to ratchet up again. And it's a function of more demand and less supply. And the pricing that we see on COMEX, the fraudulent pricing is certainly would lead people to believe that there is no demand in this industry when you see a price behave the way that it has, but quite to the contrary. What is coming out of the U.S. Mint, the high premiums that you get for Silver Eagles is more indicative, or of junk silver, is more indicative of what the demand in this market's really like right now. Remember, too, that when the prices are low, it kills exploration, and the costs are increasing to dig and to explore with higher energy costs. And let's remember that silver is a byproduct metal, by and large, in the respect that only 30% of the 800 million ounces that they mine come from the primary silver miners. 70%, over 500 of the 800 million ounces, come from mining of other metals. And if the other metals if the exploration is being stymied because of low prices and high energy prices, why it will have a trickle-down effect into the silver market. I think that certainly the disparity. You have the Silver Institute saying that this year we will demand well over 1 billion ounces, which will put us in a shortfall between 200, 300, 400 million ounces of silver. And remember, of that 800 million, 70% comes from byproduct mining of other metals. So you could see a much more dire situation next year if this continues, where the mining and exploration of these byproduct metals really start to dry up what is available for finished product in silver.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.